Alright, guys, so the global economy is hitting back on the US. Deep down, everyone knows the system is broken. And when we say system, we really mean the entire dollar infrastructure. Now, it gives the US the ability to endlessly borrow money from the world, causing a global currency crisis. And what do they do with the money? They spend and waste it away, causing inflation to get worse. US consumers are now sounding the alarm bell. They expect inflation to climb by 3.5% annually for the next 5 to 10 years. Whatever the Federal Reserve promised the world about getting inflation down to 2% has been a lie. We are seeing inflation expectations rise to the highest level in 30 years. Does it make sense to hold US bonds today? Because whatever yield you might be getting today might get eaten up by inflation tomorrow. This poses a big problem for foreign governments who are used to the old post-war order. When the US prints a bunch of dollars and they buy stuff from the world, global central banks then use this surplus to reinvest back in US treasuries. Now, it's so crazy that the majority of US debt is held by countries all over the world. There are over $9 trillion held by foreign central banks, and they want a real return on their savings. Putting aside the threat of sanctions, the value of the dollar is a hot potato. If inflation is running hot at 3.5%, you'll be demanding a higher return. You'll want a higher yield, especially if you're lending money for 10 years. You'll demand 5% or higher, but therein lies the problem. When borrowing costs on treasury bonds fly up, it triggers a snowball effect that causes every other rate in the US economy to scream higher. Not good in this hyper leveraged system. US Treasuries are around 4.5% today, while direct lending rates from banks range from 8 to 10%. So if yields fly up to 6% or more, we'll see double digit loan rates across the board easily. This pushes the US economy closer and closer towards a collapse. And what has history taught us about a crash? The government will monetize the debt and get the Federal Reserve to print money. Now, this happened back in 2008, but look at the money supply in 2020. Thanks to the stimulus, the US government increased its money supply by over 25% in less than a year. We now have a massive amount of money chasing assets. Now, we saw an incredible jump in asset prices, and we know what happened 2 years later. Consumer inflation caught up. This is the dilemma global central banks are facing. US bonds are no longer safe assets. Why? Because the entire monetary system in America is practicing voodoo economics straight from the Twilight Zone. And once we understand this, it's no surprise that governments around the world, well, they are abandoning US treasuries. It's because the entire system is falling apart. And the biggest motivated seller is China. And of course, they will sell. The entire US economic system is against them. China's holdings of US treasuries have fallen to the lowest level since 2009, a historic 26-year drop. Beijing sold $57 billion in 2024, and they now hold less than $760 billion. It's something we have said for the longest time. China has to diversify their holdings for many reasons. Now, sure, US inflation and the threat of sanctions are obvious red flags, but just put yourself in the shoes of China. Would you loan money to the US government to fund your own containment? Because US trade and economic policies are all out to get you. Trump wants to punish China and members of the BRICS.
The BRICS nations, I think that's breaking up very rapidly. We said that if they're going to go and do anything to undermine the dollar, that includes China. I don't even know that they're a member of BRICS, but they had a few nations get together to try and play cute. And I said, we're going to put a 100% tariff on every one of those nations. And at the mere thought of saying that, I think that's all broken up. That idea has no longer sailed. Now, that would be a terrible thing for our country. It would be bad for the world. They wanted to undermine the dollar.
It's no surprise that China is decoupling from anything and everything US. This is very evident from China's trade flows. The US used to be an enormous market for China, but not anymore. During Trump's first term, China was hit with a brutal trade war, and because of that, the entire Chinese export economy shifted towards emerging markets in blue. In just 8 years, Beijing nearly doubled their exports to emerging economies, including BRICS, Southeast Asia, and Latin America. They were busy building up their trade network because at the back of their minds, they knew a second trade war was coming. And here we are, guys, it's happening once again. It's not just trade China has to worry about, we also have the threat of asset confiscation. Now, if it happened to Russia, it could always happen to China as well. Just look at the situation. It's coming to 3 years and Russia's money is still in limbo. Their earnings on the bonds have also been given to Ukraine. It's no surprise that China doesn't want to face that exact same crisis. Now, while it's true that China can loan out their own stash of dollars, there's just too much to go around. And that's why Beijing has been buying gold in a big way. It's the only neutral reserve asset outside of America's control. Especially if Fort Knox turns out to be empty, China would be the biggest winner in that event. Since the war started, China has been boosting their gold holdings almost every single month. It has gone from under 2,000 tons to nearly 2,300 tons, which is a lot. This is what they publicly report to the world, but realize that China is the world's biggest gold producer, so we have no idea how much they are buying domestically. Even at this conservative level, China's gold is now 6% of their total foreign reserves. They have effectively doubled it from just a few years back. They are de-dollarizing not just bilateral trade, but their own central bank reserves as well. While China is dumping treasuries almost every month, so are major US allies. This is unprecedented because the G7 are normally active buyers of US Treasury bonds. However, countries around the world, including the West, can see the mess in the US economy. Trump is back, and his trade war is a clear threat to economies including Canada, the UK, and especially the Eurozone. The total holdings of US Treasuries fell from $8.6 trillion to just 8.5 trillion. That's a total drop of 120 billion across the board. But here's the shocking part. The bulk of this drop comes from foreign government holdings. Their holdings dropped by a massive 81 billion compared to domestic holders. And this shows us a collapse of faith in US debt. Governments just don't want to hold US paper anymore. The risk is simply too high. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Digging into the numbers, we can see countries like Japan dumping 27 billion in December. The UK sold 44 billion. Ireland dropped holdings by 7 billion. Switzerland is down by 10 billion dollars. And here's the crazy part. This is in December 2024. We haven't even factored in Trump's trade war that started this month. So we can expect a bigger treasury dump in the months to come. The German elections are done, and if there's one key takeaway from this, especially in relation to geopolitics, it's Merz pledging to break away from US influence, to have more independence from the US in both their defense and the economy. Now, this is a concrete result from Trump's trade war and his plan to abandon Europe. We can expect the EU to also slowly disengage with the US, which would mean a gradual exit from the treasury market as well. It's essential to understand how tariffs affect the demand for dollars and eventually US bonds as well. And let's take the steel and aluminum tariffs for example. Trump has imposed a global 25% tariff on all imports coming into the US. Canada, for example, is the biggest supplier of both metals to Trump's economy. Canada exports around $17 billion worth of steel and aluminum to the US. For these goods, importers in America pay for them using dollars. That part is very obvious. Now, what happens when exports drop? Canadian steel exporters earn less revenue from US buyers. In other words, their supply of US dollars starts to dry up, and this puts a big dollar squeeze on Canada. And that's why the Canadian dollar or the loonie fell. But it's not just an attack on the currency. Canada's trade surplus also starts to dry up. And this applies to all US trading partners. Tariffs cut away the supply of dollars to their economies. Canada's trade surplus with the US last year was around $100 billion. That's a huge sum of money and equates to 3.2% of GDP. Even if Canada is free from US sanctions, brutal US tariffs are enough to push their economy into recession. And when your economy is in free fall with a shortage of dollars, do you think you'll want to buy US treasuries? Of course not. You'll be dealing with a local currency crisis and an economy that needs stimulus. You'll be dumping your own stash of US bonds to raise the funds. And this poses an enormous problem for the US. Trump wants the impossible. He wants to reshore production by pushing tariffs. But at the same time, he wants interest rates and yields to stay low. He is in his own reality distortion bubble.
We know that jobs are going to be produced at levels that we haven't seen before. We know that we think interest rates are going to ultimately be coming down because of things that happen, and they go hand in hand with the tariffs.
Now, once again, tariffs are not complex. There are two major threats that can emerge from this. Firstly, consumer goods will increase in price. Now, Trump has said a lot of things, but US production has not caught up with domestic consumption. 80% of stuff in Walmart is still made in China. So tariffs will cause inflation to rise and the Federal Reserve to halt any rate cuts. Secondly, tariffs impoverish US trading partners and causes a dollar shortage. And when people go broke and they have a currency crisis, they stop buying treasuries. They start dumping bonds instead. The full damage hasn't been felt just yet. Trump's steel tariffs haven't come into effect. It will take effect come March 12th. The 25% tax on Canada and Mexico isn't done. It has just been delayed to 4th March. And let's not forget Trump's global tax on auto imports, semiconductors, and pharmaceuticals. Every country in the world would get hit with a 25% tariff. And I almost forgot Trump's reciprocal tariffs that could affect the world, from Africa to Asia to Europe. There's no escaping this one once imposed. Every country on planet Earth will be tariffed. Do I want all this to be a hoax? Yes, I hope Trump is bluffing, but what if he's not? If he really believes he's owned out of the deal, then the global economy will be in a deep crisis. Trump doesn't need Congress to impose this. He can just use executive order after executive order, and all that's really needed is his signature on the dotted line. It's a big reason why gold is in a bull market. Trump is keeping the world off balance with his crazy act. But if he really imposes all his tariffs, it might not be a net positive for the US Treasury market. If the dollar strengthens too much and countries lose enough revenue, this could trigger a wave of selling in US bonds. And when the dust clears, do you think the world, especially China, will want US Treasuries again? A big question to ask yourself. Simple question but enormous consequences. So ladies and gentlemen, we have to brace for impact here. Bring out your tinfoil hats and grab onto the railings because we are headed towards the economic end times. Welcome aboard the USS Armageddon. The next stop is the Twilight Zone as the sea turns red with the selling of treasuries. But let me know what you think. Will China sell all their bond holdings to near zero? Will Western countries continue dumping as well? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.